ahead. Affirmative 610.
This week on the Wealthy Pilots podcast, where to go if you need money? 401k loan, HELOC, personal loan. What's the deal? So we're going to get into that this week. Scott, what's going on, my friend? How are you?
Yeah, fantastic. How about you?
Yeah, man, I'm doing good. So let's just dive right in. And, advisors all across the country, you hear a lot of different things, see stuff on YouTube, so on and so forth. I talk with a lot of them. And a lot of times you hear that the 401k loan, for example, pulling that is like the last resort, kind of the, last stand, if you will. What's your thoughts?
I mean, I'm not like most advisors, but I feel like I'm not like so anti against it like some people are. It's just, you got to understand the mechanics of how it works, and some of the rules, the limitations. But once you understand it, if you feel good about it, then do it. It's okay. There's definitely worse decisions to get some cash. The 401k loan, typically you have a $50,000 max. That's one part of it. You can typically set the term, when you're taking it out right out of the Schwab or Fidelity site, you're processing the loan. You can normally set the term in terms of the payback period, 12 months up to, I think normally 48 to 60 months is about the range. The upside is the interest on the loan is you pay yourself. And with higher interest rates, the interest rate is higher, even in the 401k. I mean, last year we saw some of the interest rates on 401k loans as high as 9%. So if you want to take a loan out to do a kitchen remodel or something like that, getting 9% is not a bad way to do it. Now, the downside is that money, that 50 grand is out of the market. So it's not in your investment accounts anymore. So last year, as an example, S&P 500, if you were just in that, was up 20. So you still paid 9% interest on that money, so to speak. Not to mention the dividends that would come in from that holding too. Yeah. And then you lost that compounding on your behalf in the future too. So the downside to a 401k loan is, the unknown opportunity cost is generally, the younger you are, the larger that opportunity cost is.
And don't forget that, with the 5-year window, talking about that, if you get canned or quit, you're going to have to pay that back faster.
You got to pay it back right then, or it's a taxable distribution. So, and that tends to be, I would say, a lower risk item for a lot of our pilots, but especially if you're like, maybe you're flying for a regional and you're trying to get into the major airlines and you're like, hey, as soon as I get a better job, I'm going to quit. Man, definitely don't be taking the loan, because then you're going to need the cash, right? Otherwise it's a taxable distribution. So you want to be cautious of that and kind of be thinking through, hey, like, what does my future look like the next handful of years while I'm paying this thing back? Where if I have a HELOC, I mean, if I sell my house and I'm not upside down on it, it pays back. And that's pretty straightforward. There's no, typically maybe a small penalty, but no penalties with it. The downside to the HELOC is variable interest rate. So a lot of folks get burned in 2022 who, hey, interest rate's 0.9%. I'm going to borrow, 100 grand, 150 grand to do all these home remodels. And the payment is almost all principal going back. Well, then the interest rate went from 0.9% to 9.9%. And all of a sudden they're like, holy crap, I'm paying like $2,000 a month just in interest. This sucks. So the HELOC does have that risk to it. So again, maybe not the end of the world. If it's something that you're just using for cash flow here or there and you pay it off right away, kind of like a credit card month to month, that could be fine. But what's nice about the HELOC, a lot of times you can just use it almost like another checking account. So there's a convenience factor there. Like, typically you pay, maybe $100 to get the account open. The bank gives you the line of credit and then you can just use it at your will. So that's definitely the most convenient, but you do pay for it with the interest rates. I think right now here, beginning of 2025, they're hanging out at like 7-ish% in a lot of the HELOCs. So definitely a little higher. But again, that one is one where it could be a larger amount, which could be beneficial if you're doing a major home remodel or something like that, or using it to buy a rental or whatever the case may be. If you're kind of looking at making some sort of investment with that, it can still, run the numbers and make a little bit of sense, but it gives you a little bit higher borrowing power compared to that $50,000 limit on the 401k loan as well.
Yeah, and I think, the question pops up more. I mean, what, since 22, right? So when the interest rates started getting higher and borrowing money becomes a bigger problem,
Yeah.
costing more, whatever. And sure, we've seen the rates come down a little bit. Fed's now pausing, they say, in 25 for a while. We'll see how that goes.
Yeah, but dude, you trained a whole generation like me, come out at 18 years old. I got married at just turned 21. We bought a house right when we got married. Dude, our interest rate was like 3.8 back then. And because we were new homeowners and we thought we were getting raked through the coals. The last house we had, 2.75. I'm like, dude, I don't care where I live. I'm never selling this house. I mean, it's so you do kind of have this generation of people now that are like, I'm never selling. But then it also, I think when people start to have the discussion of like, hey, I don't want to move out of this house. Well, let's make this house our own. Okay, well, we need to do a major investment. So even for people that are, a lot of our pilots are making really good money, but still, to save up to get $150,000 for a major home remodel, it's like, well, dude, I don't want to wait several years. Like we just kind of want, our kids are young. We want to do this stuff now and enjoy it. And we can afford the payments. And so that's where I think a lot of the dialogue starts to come in on how am I going to pay for some of this, maybe a major home improvement or buying another rental or whatever the case is. So some people are really good at saving up a big lump sum and then, putting all that cash down. Other people are really good at paying stuff off really, really fast. What I definitely would recommend is don't borrow a ton and then still spend a ton and hardly make your payments. That's not the recipe for success we're looking for. But, if you need some cash, a smaller amount, the 401k loan can be an easy way to go get it done. But to your point, between some of the risks of that being out of the market, the opportunity cost, what you miss out on with it being in the market and then compounding for you in the future. And then the risk of, if you have an employment change, that being, basically due immediately upon termination, it adds some complexities and some risk to the benefit of just getting that little bit of interest payment coming to you instead of going to the bank for sure. So, but I think, the personal loan part, it's like a lot of hoops to jump through too, and the rates for those generally are not as favorable as the HELOC. So, we do see people maybe go get a personal loan if it's for a specific business purpose or whatever the case is. But that home equity loan seems to be a really popular option. But again, people are going into it with eyes a little bit more wide open now, I think. But you got to be cautious of just you're taking out a variable interest loan. So I always recommend if you're going to take out a larger sum through a home equity, have a very aggressive plan to pay that off because you just don't want that interest rate risk hanging over you. So look at that one as one that maybe you take a good chunk out to go get some stuff done for the house or the family, but get aggressive in paying that thing off.
All right, well, that's going to do it this week for the Wealthy Pilots podcast. As always, if you've got some questions or concerns, before you take any action, reach out to a qualified professional like Scott, and you can find him online at retireairlines.com. That's retireairlines.com. We've had a lot of good stuff popping up there throughout the program. Go to the show notes descriptions below for links to things to get onto Scott's calendar, have a conversation with him, all that good stuff. And don't forget to subscribe to us, support the channel, help us out a little bit here with a like or a thumbs up. And that way, if you like the content, you catch new episodes when they come out, of course, on Apple, Spotify, and YouTube. So we'll catch you next time here on the Wealthy Pilots podcast with Scott Osborn.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.